Apple has regained its position as the world's most valuable company, with its stock nearing $250 and competing with Nvidia for a $4 trillion market cap. The big question now is this the right time to invest, or has the opportunity already passed? Let's take a step back and look at the bigger picture to really understand what's happening here. Apple's journey in 2024 started with a 15% decline, but this has happened inside a consolidation. Since January 2022, the stock has been moving sideways between $200 at the high end in December 2023 and $125 at the low end in January 2023. This is why I always emphasize looking at the complete picture rather than focusing on isolated movements. That sideways market actually followed an impressive 240% rise from the March 2020 COVID crash low of $53 to the January 2023 high of around $183. This kind of sideways movement is not just normal, it's healthy. It's what we call a base formation, setting the stage for the next leg up. That's exactly what we're witnessing now. We saw a 45% climb from April's low of $165 to July's high of about $237, breaking out of the 2023 consolidation. Then came the summer earnings season, which was tough on big tech, pushing Apple down over 17% to $200. Of course, the usual market crash predictions started cluttering the internet, but I told my investing community to stay patient. Why? Because this had the hallmarks of a correction turning into another base formation. And that's precisely what happened. Apple found strong support at $200, formed a base, and has since climbed an impressive 24%, including a 10% rise just from November's low, which took the stock out of the recent consolidation and through to the new all-time highs. This momentum could very well carry the stock through $250 and towards $300 before 2024 wraps up. So, what's driving this recent surge? First, we saw the introduction of Apple Intelligence in June 2024, bringing advanced AI features across their device ecosystem. The market's response has been overwhelmingly positive, with analysts predicting this could trigger a significant upgrade cycle. The iPhone 16's strong performance has been another crucial factor. Carriers like Verizon have been aggressive with promotions, helping drive sales. There's been a mixed reaction from analysts though, with some downgrading price targets to $275 and others upgrading it to $300. I've said this before, the best guide for price target is the stock price itself. The company's integration of AI isn't just another feature update. It represents a fundamental shift in how they approach technology. Unlike previous innovations that were primarily hardware-focused, Apple Intelligence shows they're serious about competing in the AI space, potentially opening up entirely new revenue streams. The strength we're seeing in the stock isn't just about current products either. Apple's services division has become a powerhouse in its own right, generating recurring revenue that helps smooth out the cyclical nature of hardware sales. In fact, services revenue has grown to represent over 20% of Apple's total revenue, providing a stable foundation for future growth. Now, what does this mean for us as investors? While things look promising, we want to be strategic here. The smart play is to wait for a pullback to the previous all-time high and then confirm the breakout before entering. Why? Because after breaking out of a 5-month consolidation, there's always the risk of a fake breakout. When the stock looks like it's going to be pushing up but fails and moves back into the sideways market, trapping investors for a prolonged period and tying up capital that could be better deployed elsewhere. Looking ahead to 2025, we could potentially see Apple targeting $500. To understand this potential, let's look at what drove that massive 240% rise between 2020 and 2023. During the pandemic, Apple showed incredible resilience, benefiting from the shift to remote work and learning. Their ecosystem became more crucial than ever, with services like iCloud and the App Store driving recurring revenue. The innovation didn't stop either. The introduction of 5G iPhones and the game-changing M1 chip kept them at the cutting edge. The M1 chip in particular was a masterstroke. It not only improved performance and battery life, but also gave Apple complete control over their hardware ecosystem. reducing dependence on external suppliers and improving margins. Looking forward, Apple's continuing to push boundaries in multiple areas. Their partnership with Amazon for A1 chip training is particularly interesting. It shows they're willing to collaborate strategically even while maintaining their characteristic control over the end user experience. The upcoming Vision Pro headset represents their first major new product category since the Apple Watch, and early previews suggest it could redefine spatial computing. The services portfolio expansion deserves special attention too. Apple's not just selling hardware anymore, they're creating an entire lifestyle ecosystem. From Apple Fitness Plus to Apple Card to Apple TV Plus, each service adds another layer of customer engagement and recurring revenue. This diversification helps protect against hardware sales volatility and increases customer loyalty. However, we need to acknowledge some challenges. Apple faces regulatory hurdles worldwide, including the recent Brazilian antitrust case and questions about the iPhone 16 global rollout. The EU's push for standardized charging ports and App Store competition could impact revenue streams. Market saturation in mature markets means growth increasingly depends on emerging markets like India, where Apple faces intense competition from lower-priced alternatives. Competition in AI, as well as augmented reality and virtual reality, is another crucial factor. While Apple has a strong track record of entering markets late but executing better than competitors, the AI space is moving incredibly fast. Companies like Microsoft and Google have already established strong positions, and Apple will need to prove that they can catch up and differentiate their offerings. Meta is setting an example with its stock recently closing above the significant $600 resistance level. This stock has surged nearly 600% since 2022. Watch this video to find out if now is the right time to invest in this rising stock.